Okay, guys, I want to use this opportunity to talk about different instances of inducement liquidity with respect to trading harmony pattern. Okay, so we have different forms in which liquidity could actually authenticate a potential reversal zone. Okay, yeah, so we have different forms and different ways in which liquidity can always, inducement liquidity can verify and authenticate our potential reversal zone. So in this video, I'm going to talk about different instances. You're going to see them play out on the chart, okay? So one of the way is a classic example. It's just like a classic example, which is the most important one, where we'll have an inducement, a structure very close to a potential reversal zone. Now, sometimes this structure can have an order block and fair value gap here. Okay. Sometimes it will not have. Whether it has order block and fair value gap, it is a liquidity. You should not pick trade from here. You should not put your order from here. Okay, you have to wait for, first of all, for your pattern to complete. If your pattern completes at the inducement level, there is no problem. But if your pattern does not complete at the inducement level, then wait for the pattern to complete. So if we already have this structure here, this structure becomes our inducement liquidity. Now, at the potential reversal zone, we're going to have an order block and fair value gap here. So let's say, for instance, this is a valid, this could be a valid BAT pattern, okay? So all you're waiting for is the pattern to complete at 0.886. Now, this inducement liquidity here is actually one of the way we can authenticate this potential reversals on that price could likely reverse from this level. So seeing this inducement liquidity here, you can place a pending buy limit order here. Okay, because of what? This liquidity here. You can place a pending buy limit order at the 0.886 level. Okay, now you can take a second entry when we now have a displacement to the upside, leaving behind fair value gap and order block at the potential reversal zone. You cannot take another entry here. Because of what? We have what? Inducement here. Now, for this one, you can or you cannot. You may or may not. It's not necessary. If you have inducement here, probably before price push to the upside, it gave us an inducement below before pushing up. Okay, fine. If you don't have any inducement, provided there's an order block here, you can pick your second entry. So that is the first way we can see inducement to validate a potential reversal zone. Now the second one is this one, where we don't have any inducement liquidity at the potential reversal zone, meaning that this leg, this X to A leg, is very clean. There is no structure that is closer to the potential reversal zone, serving as a liquidity point. Okay, now what price could do is price might trade into this level without completing the pattern, without mitigating this order block here, or probably completing the pattern. It will displace to the upside, okay, and then comes back later on to mitigate it and then complete the pattern. That is why sometimes you will notice that, especially if you're using the indicator, you notice that price will come here. Probably this is a sharp pattern. Let me just take it for example. This is a sharp pattern. Price will come here very close to 0.886 and then reverse to the upside. You'll be like, I've missed the move, I've missed this trade. No, you realize that price will finally come back to complete the pattern and take out this level as liquidity. Okay, so if you don't have knowledge of this information now, you will go and start taking trade here, thinking that you have missed the move. Price will come back again and take you out. Price will come back, take you out before moving in intended direction. So these are ways you can just avoid unnecessary losses by understanding liquidity. So this liquidity point here is what validates this potential reversal zone. So you can confidently place your pending order here because of this liquidity point here. Okay, then sometimes you're going to have like a displacement. You're going to have like a displacement to the upside, and then probably there's a fair value gap below. Price will come back, mitigate that fair value gap and other block before pushing to the upside. So this is another way you can verify and authenticate your potential reversal zone using the concept of liquidity. Another form is this one, where you have probably, and this can occur at any time frame, and also whether bullish or bearish. Now in this instance, I'm using the bearish formation. It can still be bullish formation. Let's say for instance you have a pattern in this form, okay, and then probably there is a could be, let's say this could be a crab pattern, okay, because of the extension leg. Now whenever you see price sweeping liquidity of the previous high and then causing displacement to the upside, okay, provided that this price have taken this liquidity here and then displaced to the downside, leaving behind fair value gap and other block, you can place your pending order here, okay, stop loss above that level, provided that price have swept liquidity here. Now example is this here. You can see how price swept liquidity of this one and then displaced the downside. Now this is the order block for the entry. You can see 1, 2, 3. This candle now is the order block. That was the entry for this setup because of this sweep of liquidity. That's what I'm trying to explain to you here. So this is another way we can authenticate the potential reversal zone. Probably the pattern have completed and then you are just waiting for entry. Provided that you have gotten a sweep of liquidity here, you can place an aggressive, we'll call it an aggressive entry here. You don't need to wait for inducement at this level again. But if price did not sweep liquidity here, this is another example where price did not sweep liquidity of the high and then displace to the downside, you have to wait for inducement before taking an entry from this order block. Because if there is no inducement, price would likely sweep this order block and continue going up. So that's why sometimes you will see another block, your price will not respect it because of what? There is no inducement and there is no sweep of liquidity before the displacement. Remember that the first instance is this one, where we'll have this type of formation. The second one is this one, where we don't have a sweep of liquidity. So take your time and watch this video more than 2 or 3 times for you to understand everything. I might show some example on the chart. Now another one is this one. Another one is this one, where we have probably a setup here. This could be, let me just say, this could be a butterfly pattern, probably in this form. It could be a butterfly pattern of this nature. And then price get to the potential reversal zone and reverse. You'll be like, I've missed the entry. You have not missed the entry. Price will likely come back. Okay. Now, you can see that in these formats, yes, you can see that in this format, there was a liquidity here. Price created an inducement liquidity before displacing to the downside and then coming back, taking it out. But in this instance now, price did not create any inducement liquidity to just an aggressive, impulsive move to the downside. Now, you should not place a pending order here. You have to wait for price to make this level valid. And one way price could actually make this level valid is by creating a liquidity before mitigating this level. So you see price consolidating at this level, creating this kind of range up and down. This is what we call range liquidity. Okay, it could as well be in form of trend line liquidity, where we'll have something like this. It could be in form of trend line liquidity, where we'll have something like this. Okay, that's why sometimes you're going to see this kind of trend line liquidity. When it's ready, it will take out the low. It will first of all take out the high, or sometimes it will take out the high, take out the low, and then come back into this level before displacing to the downside. Most times that is how it does. That's how price moves. Okay, it could be in form of trend line liquidity or range liquidity. Understand this concept. Understand this concept is very, 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 very important. If you can understand this video, you're going to place entries, you're going to make more profitable trading opportunity, trading harmonic pattern. Okay, you're going to see price, that's why you're going to see price in this format. This is what we call trend line liquidity. Price will take out all this liquidity and then push price to the downside. Now, it could be in form of bullish and bearish scenario, like I've explained. If I flip the chart the other way around now, you will see the same thing here. It could be in this format. You see price doing something like this, coming down to this place. The same thing here, the same thing could be in this format, it could be in this format. Okay, so whenever you see this kind of thing, know that it is a liquidity point price is actually engineering or trying to create to make that level valid for entry. For me to end this video, let me do a recap of what I've discussed in this video. I talked about this type of liquidity point. Whenever you see this kind of thing closer to your potential reversal, so you can place a pending order here. With displacement to the upside, leaving behind fair value gap and order block, you can place a second entry here because of what this inducement liquidity closer to your potential reversal zone. The second one is this one where we don't have any inducement liquidity here. Price coming back closer to the potential reversal zone and reverse to the upside. You'll be like, I've missed the entry. You have not missed the entry. Okay, provided you have watched this video. Price will come back, take out this low as liquidity. It could be a bullish scenario with the same thing. It will take it out, mitigating this order block here to complete the pattern before pushing to the upside. You can take your entry. Okay, the next one is this one where price sweep liquidity of the previous high of this high and then displace the downside. Now, sometimes lest I forget, I don't want to complicate things. You're going to see order block and fair value gap. You have to wait for order block and fair value gap for you to pick your entry. I've explained on this chart right here. You can see when price took out this previous high and displaced to the downside, there was no entry here on this time frame. You have to wait for order block, and this was the order block. You came back the next day, probably after everything, you can see that this order block was available, and you pick your entry, and price mitigated that order block, and it's pushed to the downside. So that is one way we can authenticate potential reversal zone. Another way is this format where price displays to the downside or to the upside, depending if it is bullish or bearish, and then closer to the potential reversal zone or closer to the order block, begin to give us this kind of range liquidity. You don't have to take your entry here. That's why sometimes if you take entry here, oh, I see price is closer to this place, and you take an entry, it will start to do something like this. That's why sometimes you close the trade. After closing the trade, you see that price will go in your direction. It is just trailer liquidity. Stick to this place. If price does not come to this level, then let it be a missed entry. Okay, so that is the last one. Is this one where we'll have what trendline liquidity. So let me see if I'm going to take. Let me see if I can be able to do something. Let me see if I'll see a sample on the chart and explain all of this. Okay, let me see if I'll see a sample on the chart and explain. I've talked about this type of entry. Let me see if I'm going to see an example on the chart and talk about this one. Okay, right. So I think I see something that looks like a harmonic setup here. Let me check. Okay, this cool. Okay, so price reacted from this level, right? Price reacted from this level. Now, what do we see here? You can see that there was a structure before this level. Okay, so now we can say that this structure could be the inducement was liquidity. I don't really want to complicate things, but it could be. I just want to make sure that this thing is. I just want to make sure that you guys understand everything, all of that. Okay, good. So price have taken out this inducement liquidity. So probably there was a key level here on the higher time frame that is closer to this level. Okay, and then we'll have our pattern. Of course, this could be any pattern at all. It must not necessarily be this one. If you cannot be able to spot this one on the chart, it's fine. You can stick to those bat, crab, butterfly pattern that you understand very well. So, but then consider this was a valid pattern. So, because of this inducement liquidity here, I can confidently place a pending order. at this potential reversal zone if I was able to spot the pattern on time. Now, price will displace to the upside. Of course, it did, and gave us fair value gap and order block. Your second entry will be at the mitigation of this order block. You can take your second entry here. Well understood. You don't necessarily need to wait for inducement, but you can see that in this instance, price also gave us another inducement. Remember what I explained in this video above. Just hope I can be able to see that. Okay. good, something like this, okay, or something like this. If you flip it to the downside, the same thing. So these are different ways you can authenticate the potential reversal zone. Okay, so let me show you guys another example again for the last time. Okay, for the last time, just want to make sure that this concept of inducement liquidity is well explained and you guys understand it very, very well. Let me just switch this stuff off. You guys understand it very, very well. Just want to make sure that you guys understand it very well. Okay, so let's use this one as an example here. Now, see that this was a value. Let's just look at it from it was a higher time frame setup. I'm actually using this as an example because I traded this setup myself. Okay, so remember what I told you guys about potential reversal zone and how we use liquidity to verify that. Okay, so this was a valid deep crap, or yeah, kind of should be a deep crap or so. Okay, so don't want to go into details of measurement. It should be a deep crap, but you can see what happened there at the potential reversal zone. Let me zoom in on that. See what happened here on potential reversal zone. There was no liquidity that is closer to the potential reversal zone, and then price displaced to the downside. I know that you will be like, I've missed the opportunity, price not coming back there. But what happened? Price started coming back. But remember that price left behind fair value gap and order block at this extreme. Okay. But what the price did? Price came there very, very close and started pushing down. You'll be like, I've missed the opportunity, this and that. Price started going. What happened? It came back again and dropped below. He came back again, drop below. He came back again, drop below. He came back again. You don't need anybody to tell that this is what a range liquidity that price is building. Whenever it's ready to move, it will take out all these lows and high and then move price to where it wants to move price to, and move to where it wants to move to. Okay, so you can see it must not necessarily, it doesn't need to be picture perfect. Just understand that this is a liquidity point that price is creating. This is just a liquidity point. It doesn't need to be picture perfect. Okay, so that is what you need to understand, right? So that's it. So whenever price was ready, took out everybody out, and then what happened? It tapped into this other block and then dropped massively to the downside. So these are different ways we can authenticate potential reversal zone and all of that and all of that and all of that. There are so many examples. I don't want to go into full details. Another one is this one again. I can see here. Can see this one also. I don't know if there was a key level below that price, tested, but you can see. So there are so many of them. So whenever you want to pick an entry, always look out for all of this. Look at this one also. You can see that this was very clean. This inducement is very, very far from here. But what price did? Price took out this one as liquidity points, okay, and displaced the upside, leaving behind fair value gap and order block for entry. It just that simple. I think we had a bat. Let me see. We had a bat here. Good. We had a bat here. You can see how I pick out this setup right now. Okay, so this is where the pattern completed. It completed here, but what happened? It completed there. But you know that, first of all, there is no liquidity point closer to this potential reversal zone. So price will likely come back and take out this guy. And that was what happened. Okay, and then left behind fair value gap and order block. You'd have used this week as your order block, which is still very fine. You can see entry was made here and pushed to the upside. So this is how you can authenticate and validate your potential reversals using the concept of what? Inducement liquidity. Using the concept of inducement liquidity, okay? Using the concept of inducement. I can go on and on to explain all of this concept. Remember what I said? Price will take out the previous high. You can see what happened. It took it out and displaced to the downside, and then left behind order block and fair value gap. You can see. So this could have been a pattern, probably something like this. Let me just use this to conclude this video. Something like this could have been a pattern, probably a butterfly pattern or whatsoever. So something like that. Okay, will be a pattern into that level. Okay, you can see very, very sharp, very sharp. Now I don't really know, probably there was an inducement level, higher time frame key level, I don't really know, but then it's just that all you have to do is can see that price took out this high and then displaced to the downside and left behind all that block as your what, as your entry, and it dropped massively to the downside. So this is how you can use inducement to verify and authenticate a potential reversal zone. So this will be all for this video. You can see what is happening here also. You can see price I've taken out this guy as an inducement, and then probably there was a key level here which I don't really know. So you can see how this one is panning out right here. You can see. So if there is a setup now, this one is very, very, very well valid. Very valid. If there was a setup, which I don't really know because I've not taken the measurements, could be a setup from here. Don't really know if it's valid. I don't know. I have to check it to know. So this will bring us to the end of this video, guys. So just watch the video. If you have any question, sorry guys, if you have any question, if you have any issue with this inducement liquidity, please let me know. But liquidity is very important. Without liquidity, don't take a trade. Wait for liquidity. Wait for liquidity. Liquidity is very important. If you don't see liquidity at that, if you don't see inducement liquidity at that your entry point, I will not advise you to take that trade. Okay, wait for it to come. If you see it, take your entry. Take your entry. So that'll be all for this video, guys. I wish you guys all the best.